Welcome at a new edition of the Market Reporters with Martin Totte and myself, Casper Huisman. Thank you for all your comments of the last week. We really appreciate that because we do this for you. We look back on the last week and we try to help you, to give you some input to make good investment choices on the stock markets. And it's a difficult time. If we go back to a week ago, then the markets went down based on new corona cases in the US. That was also in the news, a hot topic in the last week. And sometimes you see that the market picks it up, and sometimes they do if it doesn't exist. So that's difficult to deal with. Also, Airbus was in the news that they announced that for the next 2 years they will cut production with 40%, and unfortunately they have to let go of 13,000 employees. On Tuesday, Shell announced that they have to write off between $15 and $22 billion. And Tesla was also in the news, not only on Tuesday, but also during the whole week. A lot of investors asked us, what do I do with my stocks of Tesla? Or
shall I short it?
Shall I short it? Or if I don't have it, shall I buy it? And Tesla is quite interesting because it's now the biggest car maker of the world, and not if you look at how many cars they produce, but the
market value.
Yeah, the market value. And it's not strange that it's difficult for you, for me, to make decisions and to have a good vision on Tesla, but you also see it in the markets. I will highlight some quotes, for example, from Wedbush analyst Dan Ives. He made some scenarios, and his bullish scenario is that it will go to $2,000. This week they were in the news because they had really good Q2 figures. They produced more cars than expected because they produced 92,000, and the highest expectation was 90,000.
Exactly.
And also they think the outlook is good because they think that they will soon come with a new kind of battery that will last for much longer.
But on both sides, for consumption, and also that it lasts longer in lifetime. No?
And also that they expect a lot from the new plant in China, and they think that Tesla will sell a lot of the Model 3s over there.
In China.
So 2000 is the top, and if you look at, for example, Morgan Stanley, they say it's too much over classified. They think it will go down to $650. And Barclays, they have an analyst, Brian Johnson, and he is in the automotive area, and he on the CNBC he said this can be like a bubble of the IT, the .com bubble
like we discussed last week.
So be careful. There's a lot of expectation in the price.
But that's always dangerous.
And if something happens that is a bad figure, some headwind, and what you see then normally it can drop a lot. So
we saw it in March. We saw it. I mean, it came down 35%.
Yeah, definitely. So that was in the news on Tuesday. Wednesday, gold was trading at around $1,800, and the last record was of 2011, and that was $1,821 per troy ounce. You can say something about
I dove a little bit into the history of gold and also scenarios that you see in the economy. And we're actually if you look at the US economy in specific, you see that the deficit of the US government compared to the GDP, so the gross domestic product, is now about 130%, between 125 and 130%. That actually never happened before, not even in 2008. That the last time that happened was just after the Second World War, and basically what they implemented then was some sort of yield control, just as Powell announced also that he wants to start doing that now. Normally, what they say, gold is a good support backup for when inflation hits, no? And so what is funny to see is that maybe I asked you this morning, did you know? And you said no, I didn't know that people in the US were not buying big chunks of gold in that period after the Second World War. Why not? Because simply the US government didn't allow private property of gold. So you as a person could not hold any physical gold in your house, in your safe, in your garden, wherever. So that was between 1933 and 1974. So that's not even that long ago that it was not allowed to have gold as a private individual. We always mention it when we talk about gold. Is it something that you should consider, that you should add to your portfolio? Well, we always mention this as an extra risk. So when really, I mean, I wouldn't want to use the word when the hits the fan, but then is gold that safe? Well, you don't know. Are you going to go to a bank and pick up your gold from the safe? Are they going to be there? No. So what you could do is follow the gold price with an ETF, or maybe take just a simple spot position or a future or whatever, and we can help you. If you're interested to add some gold to your portfolio, it's very simple. It's really cost efficient as well. You don't need to pay for storage. You can just buy it in your trading portfolio and have exposure to gold. So if you want to know something more, call Casper or myself and we help you. No problem.
Yeah, and I think it's really good because a lot of people asked last week about gold.
About gold,
and,
yeah.
But the good thing is that they are interested in gold because they are afraid for inflation.
Afraid for inflation, yeah.
So that's the good vision to buy gold.
Exactly, yeah, and they are in that sense they're on the right path.
Yeah. You don't know if it happens, but when that's your vision, that could be.
Yeah, as an investment, it's always something difficult, because you like. We always say, yeah, but it doesn't pay you any dividend. What is the price? The price is what the fool pays for it. No, yeah. That's literally what we're saying. It's not that that you can, for example, well, actually, you talked about Tesla. What is the value of Tesla? I mean, it's so overvalued if you see what they're generating. It's just hope, no?
Yeah.
So if gold and Tesla are actually now acting similar, if you can make it.
Completely the same. Okay, on Wednesday, ING and Amazon announced a cooperation together. ING will offer through Amazon in Germany loans between 10 and 750,000 euros to producers. So quite an interesting development.
Yeah, absolutely.
That ING uses Amazon or the other way around.
Yeah, because who owns the client?
Yeah.
Who is the client?
Yeah.
Yeah,
so it was really interesting, I think. And there was some negative news on Thursday that S&P expects that the contraction for this year for UK can be more than 8%. Yeah. Today, Friday, good news about, that was the news from yesterday, but good news about the new jobs in the US. Around 4.8 new jobs, so that's really positive, and also the PMI service index of China was positive. It was the biggest gain in more than 10 years. And also, if we could go back to the professionals, they also don't know exactly what to do. If I may quote, it's in Dutch, so I need some. I will translate it. PIMCO, the biggest bond investor in the world, they say. It's so difficult today to create a good portfolio because the prices on the financial markets are completely different than the real economy.
Yeah, there's a huge gap between reality and what's happening in the market.
And that's something I think everybody is thinking about it, because what you see in the street is something else
than what you see on your screen.
Yeah. So I think that's a good conclusion for today.
Absolutely.
Thank you for watching. Thank you, Martin.
Thank you,
and I hope to see you next week.